Good morning. My name is Adam Cotton. This is Investing with Adam K. I hope you're all doing well. Welcome to Salerno. Not a great background, but beautiful town. Really cool here. Happy to be visiting. It's like this small town right near the Amalfi Coast, which is what we're going to take a boat tour today and go visit it. Really excited. So, what is going on with Nike? They got crushed. Not only did they give forward guidance that wasn't real attractive, it was terrible and much worse than what the street expected. But I see a lot of problems with Nike because when I think about what they were when I was a kid, with great commercials and signing Michael Jordan and things like Be Like Mike, it was something that everybody wanted to own. I don't think they have that anymore. When I look at what kids wear, and there's so much more competition, I think they're going to have to refocus on advertising and marketing and getting their name out there and bringing that wanting of a Nike product in order to turn things around. Unfortunately, I think the stock getting punished is accurate. I think it's going to take a long time for them to actually turn around, start getting some more market share, and they're actually going to have to do things to really change things up. I think they've been relying on their brand a little too much. They don't show up at events for runners, which is where their history was and a big part of their market share. They aren't really something I think of when I think of their clothing brands and their international presence. When I go around the other countries, Nike is not so big out here. I really think advertising is a major part that they're missing at this point. And if they don't really change things, I could see a situation where they continue to lose market share year in and year out. So unfortunately, I think it could be a long-term trend, and it's just not a company I really want to own right now. I had a tiny position on. I was fortunate enough to sell it before the open, as soon as it opened up, because when I saw the earnings and started thinking through what I really thought about them, I wanted out as quickly as possible. The other thing I've noticed in the market in general is the companies that are struggling tend to really get punished and punished pretty hard, and it continues for a while. So when I saw what was going on with Nike, I didn't want to hold on and wait it out until maybe it returned back to where it is for some time. Now, as always, this is not financial advice. Please don't listen to me. I'm just a guy on YouTube sharing my opinions. You guys really need to seek out a financial planner and do your own research when it comes to your investments and not listen to me. And I would recommend not listening to anybody on YouTube because everybody has their own unique situation. We're all different. And the reality is you're not going to know when they get in things, when they get out. You have to stay on top of it if they're actually active in their account. And that's why I always talk about I have my account that's a set it and forget it one. And there are plenty of ETFs out there for people who don't want to pay attention and just want to be invested in the market. You know, me, I try to outperform the market. I've been trying to limit how many holdings I have. I try to stick to the ones that tend to outperform whether the market's going up or going down. And then I put them in an account that I don't even have access to. I think of it as a safe deposit box. My financial advisor knows that if I call him to sell anything because I get worried that if he actually follows my instructions, I'm going to probably move the money to someone else. And we just leave it there. And my goal is for it to be there for 10 or 20 years, or unless something fundamentally changes in the company. Like Nike would have been an example if I owned it in that account. But I didn't. I had a small amount in my trading account. I was happy to take the $10 loss in a weird way. I don't mean happy, but happy to get out, move on, and then figure something else because it's just a small trading account that I do for fun. I was a little surprised to see the market sell off the way it did after Trump seemed to beat Biden in the debate. Now, this is not a political discussion. I have no skin in the game. I could care less who the president is. It really makes no difference to me. I think we have two really bad choices for my own thoughts on that, but I don't know that it matters one way or another. But I would think as an investor that Trump winning is probably better for the market. So I was really just surprised to see that things sell off the way they did. It also makes me try to think of the things that would do well if Trump won, maybe oil and gas, but I don't know. The Republicans tend to get in, and while they talk a big game for oil and gas, if they actually allowed more drilling, it could drive prices down potentially instead of up for oil. And I don't know that it really impacts it, or if they're really so friendly, or if that's just rhetoric around it. So I'm not sure where I put my money if I want to make the bet that Trump's probably going to win. Um, I just know last time he won, despite everybody being so negative on it, the markets actually shot up and did really well. The initial move the night that he won is they plummeted, but by the next morning they had reversed and they were going higher, which is really interesting. And maybe the same thing happens again. Maybe there's a lot of nervousness going into the actual November election. And maybe if he does win, we'll see the same type of move where it goes down and reverses and goes back up. Me personally, I'm still quite bullish the market. I'm waiting to see what I look for what I would call a top. It seems to still be going higher, and the trend is your friend, and I don't want to fight it, nor do I see any reason to fight it. So I see the pullbacks as still opportunities to continue to get long if I'm not long already, or add on to positions and just continue to hold on. I've really been sticking with the ones that are the strongest and the best, the Amazons, the Metas, the um, Googles and Microsoft. And I don't know if you guys have been paying attention to Palo Alto Networks, but they had an upgrade recently which pushed it higher, and I'm sticking with that. Intuitive Surgical has been doing well. And I really stick to those main name brands. Oh, and Apple, which I seem to constantly forget because I still think they're overpriced, but they seem to be chugging along just fine too. And I just stick with the ones, including Costco, that I recently added on, that I think they're so overpriced, but it keeps chugging along. That there's no reason for me to fight them, and why look too far? I constantly see these analysts, or if you want to call them analysts, showing the math of these things that are on sale. But I even admit, like my Pfizer, which I love, it might be discounted for years and just not move at the rate that a Meta or an Amazon does. And in the meantime, I might be missing tons of opportunity. Now, there's good reason to be a little diversified, because if the market does reverse and I'm wrong, then it protects me a bit, because odds are a company like Pfizer doesn't fall as far. And if I want to be in dividend stocks, it's been known throughout history that typically they're still able to pay their dividends through downturns, even if the stock price goes lower. So if you're relying on those dividends, it's a nice way to not pay attention to the markets as well. Me, I'm going to pay attention to the market every day just because I am. And oh my God, did you guys see Tesla? Tesla finally breached 200. It closed the day below there. I would like to see it close above it, but kind of my point of, it seemed like it out of favor. All the bad news about Elon seems to be reversing its direction, so I'm happy to see that. And then if you guys have paid attention to Boeing, it retested those levels around $172 a share, seemed to hold there, and now it's back above $180 a share. Not that it's doing anything crazy, but again, it keeps retesting those levels. Somebody's buying it down there, so it doesn't seem to breach it. Maybe it'll hold that support, maybe it won't, but it sure seems to be making a good bottom there. Also, Target, same type of thing, retested around $140 a share, couldn't seem to breach it. Seems to be drifting higher. I guess we'll see in time. I mean, maybe it all turns and the market starts going lower and they all break and end up having a bad year. But the reality is, what I try to look for is stocks that get out of favor, the areas where the buyers seem to come in and start picking them up, and if they're able to hold those levels. From there, if they're able to hold those levels, eventually the sellers get exhausted, is the way I call it. And once the sellers are exhausted, the buyers, the real buyers, the mutual funds and the people who wield billions of dollars, do their best to buy very slowly and not just drive the stock higher and higher too quickly. So if they're able to do what they want, they slowly continue to buy it. It has precipitous falls that seem really fast, but they last a very short amount of time as they pick up shares again and continue to support the stock. So those are the ones I like. A couple of them obviously aren't the top ones, but I just think they're good potential trade. I don't plan to own those forever, meaning Boeing and Target. But the other ones, the Amazons and everything else, really, I just put them in the folder. I use the Ron Pope thing, and it's a set it and forget it type of strategy, because I don't want to not own them. I want to own them for the next 10 years. Anyway, if you could do me a favor and hit that subscribe button if you haven't already, smash that like button, make some comments, let me know what you guys think. I'm going to go enjoy the day and get to the Amalfi Coast and have some fun with my family. Have a good one.